part, we go through the tax exemption for cooperative. So cooperative are basically exempted for income tax for the first 5 years after the registration with SKM. After the 5 years, they are exempted, or we call it post 5 years are exempted, but with certain condition. First, member fund is not exceeding 750,000 ringgit, including share capital, reserve and return earning. Second, cooperative must be active and registered with SKM. Third is application must be submitted to LHDN and SKM for approval. So objective government make tax exemption is to support cooperative development, to allow capital reinvestment and benefit to the others members. Next, we go to the example of tax exemption. We got one scenario, Al-Falah Cooperative Berhad. So they are registered in 1st January 2017. We take 7 years of the assessment, which is 2000 to 2023. So members fund at the end of 2023, if share capital is 300,000 ringgit, reserve 200,000, return earning 100,000, and then members account is 50,000 ringgit. So total up we get 615,000 ringgit, which is they are exempted because first below them 750,000 ringgit. Second, cooperative is active and registered. Third is eligible for extended tax exemption but subject to any approval.
So, I will explain the special deduction under Section 65AA and B of the Malaysian Income Tax Act 1967, which are applicable to cooperative when calculating their taxable income. So, for the first one is transfer to specific funds under Section 65AA. Under Section 65AA, cooperatives are allowed to deduct amounts that are transferred to specific internal funds, such as development fund, education fund, and reserve fund. This transfer help ensure the cooperative has long-term sustainability and resource for future use. The maximum deduction allowed is 25% of the gross income, and we can see for the example, if the cooperative earns RM 100,000 in gross income and transfer RM 30,000 to its development fund, only 25,000 can be deducted for tax purpose. So, for the next one is contribution to members fund. That is under Section 65A(b). This provision encourage cooperatives to support their member through welfare assistance, health coverage, education subsidies. So for this, cooperative may contribute directly to members fund and claim a deduction. So for this Section 65AB, the maximum allowed is 8% of the members paid up capital. So let's say its gross profit of the cooperative is RM 100,000, total membership capital RM 200,000, amount transferred to specific fund is RM 30,000, and contribution to members fund is RM 20,000. So for calculation, we got from deduction 1, it is from Section 65AA, we got 25% time RM 100,000, we got 25,000. So even though RM 30,000 was transferred, only RM 25,000 is allowed. So for second deduction, we got from Section 65AB, it is 8% time RM 200,000, we got RM 16,000. From that we can see that even though RM 30,000 was contributed, only RM 60,000 is allowed. We can see that total allowable special deduction we can get is RM 41,000.
Let's begin by understanding what the members fund is. It represents the equity or ownership interest of members in the cooperative. It's also a critical indicator of both the financial health of the cooperative and its eligibility for tax exemption. The members fund is made up of three main components. First, paid up capital. It refers to the contributions made by the members when they buy shares in the cooperative. This is the basic form of ownership. Next, we have the reserve fund. This is a mandatory allocation of profits as required by the Cooperative Societies Act. It helps build financial stability and acts as a safeguard for the cooperative in tough times. Lastly, the profit and loss account. It includes the accumulated return earnings or losses from the cooperative's operation over the years. These three components together form the financial backbone of a cooperative. Managing them well ensures long-term sustainability and can also help the cooperative qualify for certain tax benefits. Moving on to the second slide. After the first 5 years of registration, a cooperative's tax status depends on the value of its members' fund. If the fund is less than 750,000 ringgit at the start of the basis period, the cooperative remains tax exempt. However, if it's 750,000 ringgit or more, the cooperative becomes taxable. In addition, cooperatives are allowed to deduct an amount equal to 8% of the members' fund from their chargeable income, which can significantly reduce tax liability.
Based on first schedule 4th paragraph in income tax rate, cooperative are charged on the progressive rate, which are the tax is based on the total income. As we look at the table, the total income RM1 to 30,000 ringgit will not be charged on tax, but it will be increased to 5%, 10% and the maximum 24% if the total income is exceed RM 750,000 ringgit. Next, we will look at the difference this cooperative society with other entities, which is company and individual. First, about the tax rate. The company will be charged on the flat rate 24%. Cooperative society will be charged on the progressive rate until 30% maximum and will get more special deduction. Individual will be charged on progressive rate until 24% maximum. Next, company and cooperative society have submit Form CP204 and submit it on 7 months after accounting year ended. Individual must send Form BE on 30 April or 30 June. Next, cooperative society is governed by different legal framework which is under SKM. The company is under SSM and the individual is under LHDN. Last but not least, while the company and individual also receive their tax relief, cooperative societies enjoy their special deduction that can reduce their taxable income significantly. Now, I want to share how to calculate the tax. As we look at this example, XYZ Cooperative have total income as much as 471,200 after all special deduction. So, using the table that I showed before, the tax that the company will get is 77,952 ringgit.
PAAC Society was registered as a cooperative on 1st January 2010. According to the Income Tax Act, for cooperative, they get a tax exemption for the first 5 years if their members' fund is less than 750,000 ringgit. After that, from 2016 onwards, they are taxable if their members' fund is more than 750,000 ringgit. In 2019, PAAC Society's members' fund stood at 860,000 ringgit, so they are taxable for that year. Now, let's move on to another example using PAAC Society for Year of Assessment of 2019. Now, let's look at the figures we'll be using for our calculation. The net profit for 2019 was 700,000 ringgit. They paid 160,000 ringgit for Cooperative Educational Fund, and their members' fund as at 1st January 2019 was 860,000 ringgit. Next, we'll compute the chargeable income step by step. First, take the total income, which is 700,000 ringgit. Then, we deduct two special deductions. The first one is for payments made to the Cooperative Educational Fund. The maximum allowed is 25% of the total income, which is 175,000 ringgit. But since the society only paid 160,000 ringgit, we deduct that full amount. The second deduction is 8% of the members' fund as at 1st January 2019. So, 8% times 860,000 ringgit give us 68,800 ringgit. So, the final chargeable income for PAAC Society for YE 2019 is 471,200 ringgit. And that's how we calculate the chargeable income for a cooperative society based on the given allowances and deductions. Thank you.